For years, the British housing market seemed unstoppable. Prices soared, rents climbed, and investors believed their fortunes were guaranteed. But in 2025, the crash no one predicted is finally happening. Across the UK, cities that once boasted rising property values are now facing massive declines. Once bustling streets are going quiet, landlords are panicking, and the dream of endless growth is crumbling. From London to Manchester, cities that were once safe bets are now teetering on the edge. In some regions, house prices are set to drop by up to 50 to 80%. Developers overbuilt, interest rates soared, and buyers have all but disappeared. The power has shifted, and for the first time in a long while, renters and buyers are in control. Welcome to the UK Dream. In this video, we're counting down the top 10 UK cities where the housing market will crash in 2025. Stay with us until number 1, because the cities on this list are set for massive transformations, and the ripple effect will change the market for years to come. London's once unstoppable housing market is now feeling the heavy weight of its own success. In 2025, some areas of the capital are seeing property prices drop by up to 40%. Luxury flats, once in high demand, are particularly vulnerable, as they no longer attract the same level of buyers or renters. With global buyers retreating and the pandemic shifting how people live and work, the demand for central London properties has fallen sharply. The housing market's decline can be attributed to several factors. High interest rates, which make it harder for buyers to afford properties, especially in the luxury sector. Lower foreign investment, as global buyers are staying away due to economic uncertainty and rising taxes, and oversupply in some parts of the city, particularly in new builds. Areas like Canary Wharf and Battersea, once synonymous with sky-high demand, now see higher vacancy rates and price reductions. Even traditionally strong markets like Chelsea and Kensington are witnessing signs of stagnation. Sellers who once expected bidding wars are now facing months of empty listings. For landlords who heavily invested in high-end properties, the picture is grim. Many are offering incentives like rent discounts and flexible lease terms just to attract tenants. For renters, the shift is an opportunity. With more vacant properties and more competition for tenants, prices are cooling, and renters are finding themselves with greater negotiating power. London remains a global city, but the days of endless growth appear to be over. The capital's housing bubble has burst, and the market is now recalibrating, making 2025 the year of reset. Once heralded as a booming property market, Manchester is now grappling with the effects of overbuilding. Developers flooded the city centre with new apartment blocks in recent years, eager to capitalise on a growing population and influx of young professionals. But in 2025, the market is showing signs of strain. Vacancy rates are rising sharply, and many developments sit empty as the supply has vastly outpaced demand. In particular, Salford Quays and the city centre have seen hundreds of new flats come online, but tenants are not filling them. Many of these units were marketed at premium rents, but now that rents are beginning to level off across the city, developers and landlords are offering hefty incentives, from free rent months to reduced deposits, just to fill the gaps. As a result, prices are dropping, especially in the luxury apartment market. The problem is multifaceted. The slowdown in migration, particularly from overseas workers, and the economic uncertainty in 2025 have made tenants more cautious. Additionally, many young renters, especially students, are opting for more affordable options outside the city centre. A growing number of people are also moving out of urban areas altogether in favour of suburban or rural homes, especially as remote work continues to thrive post-pandemic. As a result, prices for 1- and 2-bedroom flats in Manchester have started to dip, and developers are scrambling to fill empty units. The market is now correcting itself after a period of over-enthusiastic growth. and it's unclear how long the downturn will last. For investors, it's a wake-up call. The once booming property market in Manchester is starting to show its limits. Bristol has long been one of the UK's most desirable cities for property investment, but in 2025, the market is cooling dramatically. The city, once characterized by rapidly rising rents and sky-high property prices, is now facing a major correction. After years of unsustainable growth, Bristol has an oversupply of new builds, which is flooding the market just as demand is slowing down. The city saw a rapid increase in construction over the past decade, particularly in areas like Bedminster, Harbourside, and Southmead. Developers rushed to meet demand, confident that the influx of professionals and students would continue indefinitely. However, with higher interest rates, inflation, and stagnating wages, renters and buyers alike are feeling the squeeze. As a result, prices are beginning to drop in many areas of the city, especially in newly built luxury apartments that once commanded premium prices. In 2025, rents are also starting to fall as vacancies increase. Landlords, particularly those who over-leveraged during the boom years, are being forced to slash prices just to fill empty properties. Rent-free months, deposit-free leases, and even gift cards are being offered as sweeteners to entice tenants. This signals a major shift in the rental market, where power is shifting away from landlords and back to renters. The city still boasts many attractive features, like its creative industries, thriving universities, and excellent public transport. But in 2025, Bristol's housing market is far more fragile than it has been in years. The unsustainable growth of the past is giving way to a more cautious future, and the dream of rapid returns from property investment in Bristol has started to lose its shine. Glasgow, once riding high on the back of urban regeneration and increasing housing demand, is now facing a major slowdown in its housing market. In 2025, the city's housing market is in a state of crisis as affordability tightens and demand shrinks, particularly in the city centre. The past decade of growth in Glasgow was driven by a rising population and an influx of professionals moving into new high-rise developments along the River Clyde and in areas like Finnieston and Merchant City. However, in 2025, rents are stagnating and property prices are on the decline. Part of the reason is a shrinking workforce, as Glasgow's major employers, including those in the tech and finance sectors, have begun cutting back due to economic pressures. As a result, tenant demand has slowed, and developers are struggling to fill the new luxury apartments they have built over the last few years. Additionally, there is now more competition from other UK cities, where prices are still lower, but amenities and job opportunities are still plentiful. The city is also facing tightening affordability, with the average monthly rent rising above £1,000, while wages remain stagnant. The student market, which has long been a stabilizing force for the city's housing sector, is also experiencing slow growth, which is further exacerbating the problem. For investors, Glasgow in 2025 is looking less like a booming market and more like a city struggling to maintain momentum. The oversupply of property and the challenges facing renters are combining to create a market in crisis. Glasgow is far from collapsing, but it is certainly facing a slowdown that will have long-term implications for the housing sector. Cardiff's housing market has been cooling for several years now, and in 2025, the Welsh capital is facing its biggest challenge yet. The combination of high property prices, a weakened student market, and stagnating rent growth has led to a dramatic shift in the market. Over the past decade, Cardiff saw tremendous growth in property prices and rental rates, particularly due to the influx of students, professionals, and public sector workers. However, by 2025, the demand for new high-rise flats and expensive properties in the city centre has started to fade. The student market, which was once the backbone of Cardiff's rental sector, has slowed. with fewer international students arriving and a growing number of students opting for cheaper, more suburban accommodations. As a result, the city now faces an oversupply of properties, with many new developments sitting empty or failing to reach expected rental levels. High rents and inflated property values have also driven many would-be buyers out of the market, leaving behind vacant homes and longer listing times. Rent prices are forecast to drop significantly, and many landlords are offering incentives to secure tenants, including free months and reduced deposits. Cardiff, while still offering a strong job market, excellent education opportunities, and a desirable location, is facing a major price correction in 2025. For those who were banking on endless growth, the market has taken a sharp turn, and renters may now have the upper hand. The housing bubble that once made Cardiff a hot property market is now deflating, leaving uncertainty ahead. Leeds, once known as one of the fastest-growing property markets in the UK, is now facing an oversupply crisis. Between 2021 and 2024, developers poured billions of pounds into new housing developments across the city, particularly in the city centre and regeneration zones like South Bank and Holbeck. But by 2025, it is clear that the market has overheated. The problem? Demand simply has not kept up with supply. The regeneration areas that once boasted high hopes of transforming Leeds into a major residential hub are now flooded with empty units. Developers are struggling to sell or rent out properties, and many are offering deep discounts, rent-free months, and zero deposits just to fill the void. In areas like Leeds Dock and Holbeck Urban Village, vacant properties have become common sights. The oversupply is being exacerbated by broader economic pressures. High interest rates, inflation, and slow wage growth have made home ownership unaffordable for many potential buyers. Renters are also holding off on moving, unsure of the economic landscape ahead. As a result, prices in these newly developed areas are starting to fall, and vacancy rates are climbing. The once promising housing market in Leeds has now transitioned into a more cautious phase, with developers and investors having to deal with the reality of lower returns and longer hold periods. With limited demand and too much supply, Leeds is now on the downward slope of its growth cycle. Nottingham, which saw a flurry of new developments in recent years, is now facing a real estate slowdown. A sharp rise in unsold new builds, coupled with price increases, has pushed many potential buyers out of the market. In 2025, this combination is beginning to take its toll, and property values are starting to decline. The city has experienced a housing boom in recent years, driven by both student accommodation and residential developments. But now, the impact of overbuilding is becoming clear. Many developers and investors are sitting on unsold properties, particularly in newly developed areas like Nottingham Waterside and Sneinton Market, where the supply has outstripped demand. On top of this, affordability is becoming a bigger issue for first-time buyers. With prices rising faster than wages, many locals are being priced out of the market. The buy-to-let market is also feeling the squeeze, with rising mortgage costs and rental yield drops becoming an increasing concern for investors. As demand cools, prices are seeing a slow but steady decline, and vacant properties are becoming a regular sight. Developers are now having to lower prices and offer more incentives to move units, but the market's downturn shows no signs of reversing in the near future. Nottingham's housing market in 2025 has shifted from rapid growth to slow contraction, and it's likely to stay that way for the foreseeable future. Birmingham, once the powerhouse of the Midlands property market, is now experiencing significant challenges in 2025. The market has been oversaturated by the number of new housing projects launched in recent years. Developers rushed to create apartments, but demand has not kept up, leaving many properties empty. This oversupply has led to declining prices and a rising number of vacant units. The city centre has seen an influx of new builds, from high-rise apartment blocks to mixed-use developments. However, with interest rates climbing and rising living costs, both renters and buyers are becoming more hesitant. While the city still has a strong job market and infrastructure, many properties are not as appealing to buyers and tenants as they once were. Vacancy rates are rising, and the luxury flat market in areas like Brindley Place and Broad Street is feeling the pressure. Even though the area has been a hot spot for young professionals, rising costs and more affordable options outside the city centre are pushing people away. Developers, facing increasing debt and falling prices, are being forced to offer more incentives just to attract tenants. Birmingham's housing market in 2025 is struggling to maintain its momentum. With an oversupply of apartments and weakening demand, prices are dropping, and many new developments are failing to meet the expectations of their developers. Investors are having to reevaluate their portfolios, and renters are looking for better value elsewhere. Southampton, once a thriving property market driven by its coastal location and proximity to London, is now experiencing a downturn. The luxury flat market in the city is particularly vulnerable, with high service charges and empty properties becoming more common. Many of the new developments built in the last few years have failed to meet demand, and this has led to rising vacancy rates. With its historic waterfront and cultural significance, Southampton should have been a booming property hotspot. However, much of the recent development has been focused on high-end flats and expensive apartments that local buyers and renters simply can't afford. As a result, many of these luxury units are now sitting empty while developers scramble to fill them. Rising service charges, increased property taxes, and high maintenance costs are also a factor contributing to the decline in demand. For landlords, the financial strain is growing. Many are offering rent reductions, free months of rent, and utilities included just to keep tenants. But these efforts have done little to reverse the market trend. In 2025, Southampton's housing market is facing a significant slowdown. With high-end properties struggling and affordability becoming an issue, the city is likely to see a further drop in property prices. The once thriving area is now in a major downturn, and landlords and investors are finding themselves stuck with empty units. Newcastle's housing market, which once saw steady growth and rising property values, is now in a state of slow collapse. In 2025, the combination of corporate layoffs, fewer investors, and a weakened local economy has caused a significant drop in demand. Empty units are becoming more common, and vacancy rates are rising across the city. The once booming rental market in Newcastle, fueled by students, young professionals, and a vibrant job market, is now facing stagnation. Corporate cuts in key industries like finance and tech, as well as a slowing job market, have reduced the number of people moving to the city. As a result, rental yields are shrinking, and the influx of new renters has slowed dramatically. Landlords are struggling to fill vacant properties, and many are being forced to offer rent discounts and longer lease terms just to keep tenants. Newcastle's housing market in 2025 faces a perfect storm: oversupply, weak demand, and a struggling local economy. Investors are pulling out, while renters are moving to more affordable areas outside the city. The market isn't crashing immediately, but the decline is clear. Newcastle's housing sector is heading for tough times ahead. There you have it. The top 10 cities where the UK housing market is crashing in 2025. Prices are plummeting, developers are pulling back, and landlords are being forced to face reality. If you're buying, renting, or investing, the next few years will look very different from what we've seen in the past. If you found this breakdown eye-opening, don't forget to hit subscribe, turn on notifications, and share this video with anyone who needs to see what's coming. The UK housing market is changing fast, and the UK dream will be here to keep you ahead of it.